Good morning, everyone. My name is Kevin Tayebaly. I'm one of the founders of ChangeNOW. For those of you who don't know ChangeNOW, we organize every year the largest gathering in the world of solutions for the planet. So it's more than 40,000 people that come under the great roof of the Grand Palais in Paris to gather and showcase the amazing work that they're doing to address one of, or several of the UN goals. And on that, we cover topics around climate, biodiversity preservation, nature, oceans, and many more topics. So we bring innovators, we bring investors, media, talents, and to really accelerate concrete change so that we can actually meet the objectives that were set in 2015 when the UN goals were set. I'm delighted to be with you this morning because one of our missions in the past 7 years now has been to help connect investors with amazing entrepreneurs, but also drive more capital in nature-based solutions and also help investors understand better how to invest on nature. So this morning we're going to spend some time with three amazing professionals of what investment in nature is, and I will pass the mic to them. But first I'm gonna ask you to introduce yourselves. So we have Antje, Erik, and Romain. If you could just share with us a few words about yourselves and the work that you're doing. Antje, maybe?
Thank you very much. So my name is Antje Biber. I'm a partner and a member of the board of a company called FERI. We're well known fairly well known in the German-speaking Europe. However, we are working with large asset owners worldwide and mostly also in Europe. We also do a lot of advisory and research, and my role here is actually to speak in the perspective of asset owners as pension funds, insurance companies, and also private individuals. And we have been doing some really intense work on their strategies of how to really invest in nature, how to invest in biodiversity, how to invest in the oceans, because at that scale of pension funds of the size of 680 billion, which is like the largest pension fund in Europe, they are committed. So to give you a hopeful start of this conversation, this pension fund is ABP, which is the largest pension fund in the Netherlands. And they've just announced last year to put 30 billion euro into impact investing. So that's the hope. And despite all the noise from the other side of the Atlantic, I think it is a good way of starting this discussion because this movement will go on.
We're going to get there in a few minutes. Thank you, Antje. Erik, do you want to share a few words about yourself?
My name is Erik Bindslev. I'm a food entrepreneur, sustainable food entrepreneur of more than 25 years. For the past 6 years, I've realized that I need to show up in different sectors, including the financial sector, in order to get our food system fundamentally changed from a degenerative food system to a regenerative food system. And that goes across the big global planetary biomes of soil and ocean. Interconnected at the hip and essential for survival of humanity and everything that we hold dear. So I show up in different ways. I'm a partner in a private equity fund that is 300 million. We are buying up farmland in Europe and we're turning it regenerative. I have an initiative together with the Savory Institute, which is transforming the world's grasslands into productive ecosystems again, because we've removed all the animals from the land and we need to put animals back on the land. By the way, grassland is 40% of world terrestrial area, so it's a big chunk of land, but nothing compared to the ocean, which is, as we know, more than 75% of our blue planet. And the ocean is where it starts and where it stops. So I'm also lending my voice to Monaco and the Foundation's initiative, the Fund Re-Ocean, which is trying to address these systemic issues in the world.
Thank you, Erik. Perfect transition to you, Romain.
Absolutely. Thank you, Erik. So I'm Romain Ciarlet. I'm the executive director of the Prince Albert II of Monaco Foundation. So as many of you are already aware, we are an organization that was founded and that is chaired by His Serene Highness, Prince Albert II. And we have one purpose, it's to protect the environment. So it's quite a broad mandate because we touch upon a variety of topics: climate, biodiversity, pollution, and we operate globally. We have a team of 40 in Monaco, but we have 11 offices around the globe, so real international presence. But what makes the foundation really unique is how we approach these challenges. First and foremost, we are a philanthropy. So we raise some funds and we support activities that don't have economic models, like conservation, innovation, research, activism, awareness. But we also do a lot of advocacy and, I would say, positive lobbying. I don't like the word lobbying because it has a negative connotation. But we do positive lobbying because we are the only NGO chaired by a head of state. So we have a very specific relationship with the diplomatic services of Monaco, and the Prince has always been very involved in order to lend his voice and progress environmental topics on the international area. And last but not least, and this is how we connect, we are impact investors. We've been investing massively into funds that are impact funds, obviously, and we specialized in the blue economy. And our flagship initiative is the Re-Ocean Fund, but I won't present it now because we'll have the opportunity to discuss it later.
Thank you, Romain. So let's start with the current context. So we've seen in the past few years, trends that show that investors are increasingly, able to evaluate their impacts on nature. We've seen a great flow of capital in impact investing and in nature-based solutions over the past few years. A growth as well in sustainable investing in education. Now, how do you think that the current, political and economic context will affect the mobilization of capital from investors? Do you see an impact, short-term, long-term? What's your take on that? Could you maybe, Antje, start?
Yesterday I've heard the sentence, investments must not be political. And I think that's a very good sentence. And if you look at very precisely what is driving large investments, especially in institutional side, it's three things. It's risk, it's the fiduciary duty, and at the end of the time, it's also the responsibility of those, for example, pension funds. And as you can hear, there is no politics in this. So the fiduciary duty is to pay out pensions. So they have the duty of being able to pay out pension for the next 30 years. And therefore, the huge risks, which we can all read at the World Economic Forum risk report, which are mostly connected to nature and climate change, will be there and will be included in the long-term investment strategy. Secondly, the fiduciary duty. They have the obligation to be able to pay out and to take care of and responsibly take care of the ownership and the wealth of the participants. And these are nurses, normal people, and it's their money. So they have to be very, very responsible. What is the money doing? And thirdly, and that's actually at this time something very hopeful as well, is the regulatory environment. So the European Commission Action Plan and SFDR and CSR will not change. And that is actually the main driver of also institutional money. So I believe, yes, there will be a lot of, as I said, noise. Unfortunately, the bad voices are the loudest. However, it's time to stand up for Europe and say we are strong and we have a clear view and we are responsible.
Yeah. I'm liking the start of this panel. Erik, Romain, do you want to also comment?
Very quickly, I can only echo what you just said, Antje, but I think the climate crisis, the biodiversity crisis, the pollution crisis, it's nothing political. It's a reality, and you cannot look away from this reality because it's translating into very concrete things. We've seen an acceleration of the extreme weather events, and these come at our expense. It's costing us billions and billions and billions of euros. So at the end of the day, I think that money talks. And if we look at the situation with pragmatism, we cannot just avoid these issues and challenges?
Oh, so I mean, I have a very, I would say the reason why I became entrepreneur is because my values needed to be aligned with what I did every day. And I think we have, all of us in this room, when we really touch down into our hearts, we feel we have a moral obligation to change the systems that we have created. They're completely made up, by the way. Every system we have on Earth is completely made up. We can make up new ones. We do it all the time. So when we come to the asset owners question, I've gone full circle. I've gone from changing gradually to changing GDP, the way we measure things and what we include in our economy measurement, to the fact that we actually have frameworks that are not being cared for. They're not being done properly. We have fiduciary duty, you mentioned them, Antje, for board members, for financial advisors, to asset owners, to actually calculate risk. I come from the food industry. How come when you evaluate a company like Nestle or Unilever, the biggest risk is not there in the assessment, in the valuation of the company? If you take, PwC did a report some year, I think a couple of years ago. If you take the net present value of Nestle or Unilever and you calculate nature risk to the supply chain, they would go down, the valuation would go down by 40%. 40. Last year, yields from agriculture went down 23%. These people, and I had an analyst yesterday on a panel saying, if you take the biggest global food companies in the world and you calculate the future risk to their business properly, including nature, they will be insolvent in 5 years. Their balance sheet would be negative. Boom. Drop the mic. Why is it so hard to wake up and just do the work properly? Financial advisors are not doing their job. And pension funds, fiduciary duty to secure the future income for the beneficiaries is not calculating the biggest risk and calculating the biggest risk to balance sheets of biggest companies on Earth. That's not an oversight. That's actually fraud. So let's go there and let's start there. And then we can go to the companies that most destroy nature and drive out cost of capital and all of the other mechanisms that we need to do. But this is the number one. Do your job properly.
Thanks for that, Erik. You were talking about, you said money talks. How do you go and convince investors, to invest in nature-based solutions? How do you, what are the arguments that work today for you? Are there, is it, the moral duty that Fabien was talking about just before, about, the duty to our future generations? Or is it about the financial ROI? What works, what language works to investors to, bring them in that direction?
Well, I think it depends on the category of investor. It depends on who you have in front of you. I mean, a philanthropy will react totally differently. A family office might have pure impact objectives. Some of them try not to compromise impact for revenues. Others are purely interested by the returns on their investment. So there is no right answer to this question. And we had this experience as being on the side of an asset manager. We see that you have to adapt to the different interlocutors that you can have.
Erik, Antje?
I think that is the key issue. You have to adapt to the language of the investors, and you have to know what is the overall objective and the most important objective of these investors. For example, as my favorite pension funds, their objective is to pay out pension. Therefore, they have a very strict risk and return profile they have to achieve. There is nothing they can do about it. So there is no less return they can accept. That's absolutely impossible. So, but However, there's enough solutions that fulfill these risk and return profiles. And that is important to say and to really speak their language, show them how these kind of investment opportunities are fulfilling their needs, and then show them how the economic side of it is actually working. And if you look at renewable energy, is the best case of it.
Yeah. And it's also, I mean, there's a new language that we need to add. You know, the assessment of nature risk is not something that's on everybody's plate. So the education is really important, which is why Antje has taken an initiative, which I'm partnering with, in order to educate asset owners. Because it's really important that we don't just stand there and point finger, we proactively try and do something about it. And we had the chairman of APG in the room, ABP. From the Netherlands, 600 billion under management, the 5th largest pension fund in the world. And they proactively, they don't say negative screening, but obviously they have to produce returns. He said, unless we step out of asset classes that are the most harmful to nature, we will not be able to generate the returns that we need to generate for our beneficiaries in 5 years. And for other asset owners to hear that assessment and actually hear something that is blatantly obvious in my world, but it's not blatantly obvious to every world, can help us nudge the system into a place where, yes, they're doing the role, they're fulfilling the role that they legally are obliged to fulfill.
Yes, but if we want to attract big money and more traditional investors, you need to deliver market returns, because they will never, ever compromise market returns for impact.
But what's market return today is not market
At least
returns in
20%.
5 years. And that's the whole point. Nature risk will fundamentally shift the expectations of returns in a very short time span. Then we can make up financial instruments like Bitcoin and other things to create returns out of thin air. But if we want to stay in the real economy and what matters to people, then we have to generate returns for stuff that is currently beginning to collapse and is underpinned by nature.
So you were speaking about fraud before. What about regulation? You know, here, this year, we're talking a lot about deregulation. How do we, you know, what do you see is the role of regulation in driving shifts of behaviors in the investment world, and particularly in the context of the cunning Montreal Global Biodiversity Framework, what kind of those framework, what kind of role can they play?
For me, it's the most important driver and accelerator of change and transformation. Because simply it drives and changes the financial markets. And you were speaking about climate risk and nature risk. Due to the new regulatory frameworks that are coming up and due to the great initiatives of the central banks, nature risks are supposed to be part of banks' risk assessments. That means in order to pay out or to give loans to companies, banks have not only to consider the financial stability of a company, but also the nature and climate footprint of the company, because it's simply a long-term risk to the economies of that company. So due to the fact that you start at the top of the value chain, at the banks who give out the money, and they have to include these kind of risks in their assessment, and all of a sudden, companies that destroy nature, who are very depending on nature, they will not be able to get cheap money anymore. So once that little turn has been made, this whole system will change. And all of a sudden, the credibility, and also the value of those companies will change. And secondly, on the investor side, honestly, large institutional investors are 100% driven by regulatory frameworks. There's nothing somebody does from a personal, moral perspective. So every single decision is regulated. And that regulation, thanks to the European Commission, I'm a big fan. Yes, of course, there are things that we can discuss in the nitty-gritty, a little bit too much detail, but the overall idea to drive assets towards a more sustainable economy is succeeding. And I believe it's even more important now than ever.
And I think that well, I totally agree with what you just said. I think that regulation can also fuel innovation. You were mentioning new regulations like TNFD, CSRD. What we saw is that these innovations have driven a lot of innovative solutions in the data space. And it's connected to the topic of this, to a theme of this year's World Economic Forum. Because when you have such regulations, which are groundbreaking, because they are game changers, because now companies are pushed to have a hard look at their dependencies on nature and their impact on nature. And therefore, you have seen massive amount of companies developing solutions to collect data and analyze data. And actually, we know the space quite well because we invested in a company called Nature Metrics. So I can take this example so you understand that it's really something groundbreaking. Nature Metrics is a conservation data company specialized in eDNA. So they can take a sample of soil, of water, extract the DNA, and translate this into biodiversity insights. So this is a cost-effective, fast way to meet the demands of large corporations that want to report their impact on biodiversity. And when you just combine this with artificial intelligence, you can spot patterns and you can really do biodiversity assessments that serve the mining industry, the offshore wind industry, traditional conservation projects. And this really changed the way we see impact reporting. So we see that regulations just lead to these innovations. We see this in the shipping space as well, because the IMO has set super ambitious targets in the shipping industry that have driven a lot of innovation to retrofit boats, to optimize through digitalization. So in my opinion, regulation is far from being an obstacle. It's more an enabler.
Driving markets. And there's tremendous initiatives out there which are really trying fundamentally to change the way that we account for things, you know, and include fundamentally what matters to humanity, which is not a new iPhone, by the way, or a subscription to AI. It's nature, and it's our interrelationships and the other things that we deeply value as a species. But we have the International Sustainability Standards Boards Initiative, which is fundamentally a global initiative that will change the way that we do accounts, full stop. And we have, and I think Emmanuel Faber did an update on that. I think 60% of the world's economy is currently signed up to that. Central banks are committing to it, nations are committing to it. And also we have to be not myopic on the West, because while we are discussing all of this and how to do it and not do it, China is leading the way in this. China is decarbonizing, China is protecting its nature, China are doing all the right things. And I think we should look east. We begin to look east. Also looking west is a little terrifying at the moment, but we begin to look east. I think we could create alliances and learn a lot from the speed by which change can happen.
I'd like to come back to the debate about market returns, because you pointed at the fact that you can invest in nature and have market returns, which Erik wasn't too convinced about. But
I'm trying to prove it in agriculture, which is pretty hard.
But could you give us some concrete examples?
Well, we have one good example. It's the ReOcean Fund. So I'll start by explaining what it is, because many of you might not be aware of this initiative. It's a private equity fund that was launched by the Prince Albert II of Monaco Foundation in partnership with Monaco Asset Management. And we are raising 100 million euros that will be invested in 15 to 20 companies across different verticals of the blue economy. So we decided to move in that space because we saw a great momentum behind the sustainable blue economy, behind ocean innovation. There's a booming pipeline of companies. It's doubling every other year. We see 2 digits growth in some sectors of the blue economy as well. And so it felt like investing in that space is not only the right thing to do, It's the right moment to do it. So we designed the fund as an impact fund. So we want to invest in impactful companies. And what I can tell is that many of these companies contribute to the regeneration of ecosystems. You're a food expert. I'll take the food example. When you look at sustainable blue food systems, you see one thing. 3 billion people around the globe depend on the ocean as a main source of food. Yet, we have 50% of the seafood that comes from wild catch. You have 35% of the global fish stock that is overfished. So we don't let enough time for the ecosystems to regenerate. And when you look at the 50 other percent, aquaculture, it seems like a solution, but it's not, because in aquaculture, you feed fish with fish oil and fish meal. So if you feed fish with fish. So you put pressure on some specific ecosystems. And when you have such a high concentration of fish, there are diseases, and you use harmful chemicals and antibiotics that just contaminate surrounding ecosystems. So it's a catastrophe, actually, for biodiversity. The industry it does. But the industry is understanding that if we continue with a business as usual approach, it will harm their business. So we're trying to impulse a transition, and this is very much leaning on innovation. You see, for instance, hardware to avoid bycatch. You see companies specializing in sustainable supply chains, in alternative feeds. Some companies leverage data and artificial intelligence, again, to improve the management of aquaculture farms. So these are real opportunities to have an impact. But when you look beyond the impact, they have real robust business models. At ReOcean, we're looking not at startup companies, we're looking at scale-up companies. And we've seen so many companies that already generate a significant amount of revenues, that have a steady over 50% year-on-year growth since the last 5 years. And this is really encouraging, because this is showing the dynamics that you can see in the different sectors of the blue economy. There are a few unicorns, e-fishery, sail drone, not that many. But this is just showcasing, in my opinion, that the ocean has become an investable asset class, and that you can definitely have an impact and expect to outperform market returns.
And I want to comment on this, if I may, because I think we need institutional capital to flow. So while we're assessing the existing economy, we have to build new asset classes that have a new view, I would say, by design, a regenerative approach to resources and the way that we make money. And ReOcean is a fantastic example of that. But it's one of a dozen funds doing this in the world, the largest of which is 250 million. It's pity. Just the pension part of the world is 350 trillion. So bearing that in mind, there's a pioneering job being done here, which involves a lot of risk and uncertainty. In the agricultural sector, we're trying to do the same with Regenerate, and we purposely wanted institutional capital to fund it. So we have one big financial company for half of the 150 million, and we're getting a couple of pension funds to fund the rest. And fundamentally here, we're selling real assets. So again, back to Antje's point about using Trojan horse language. It's not. It's explaining it in stuff they know. Buckets they know. This is a real asset game. We don't call it regenerative agriculture, but fundamentally, that's what it is. And that's the only way we can appreciate the value of that land, is using those techniques. So beginning to also meet in the language bit, you know, an apple is an apple, but it's not an apple. So yeah, I mean, I just wanted to pitch in, but we are frontier stuff. It's frontier stuff, and we need bigger pools, bigger volume, bigger transformational power. But I think it'll come. I think we're at the cusp of pressing the system to a point where it's breaking down, and we can see that in agriculture. Prices are going up, double, tripling.
Antje, you want to react on that?
Yes, and exactly what you said at the end. One thing is like the innovation drivers, which is your fund, which does a tremendously wonderful job. But that's one part of the value chain. The other part of the value chain is the big existing industries. And one big industry, which is also super attractive for investors, is of course energy. energy production. And right now, renewable energy has been already one of the most popular asset classes of asset owners. All of them have huge infrastructure portfolios with sometimes 80-90% of renewable energy in it. And now, and what is very promising, yesterday there was also a lady from Ørsted, renewable energy is one source of returns. But if you combine that with nature, then you get something which is increasingly helping the restoration of nature and also oceans, including a very interesting double return. And what am I talking about? I don't know if you've ever heard of it. It's multi-use infrastructure. That is something I believe one of the highlights. Multi-use infrastructure is, imagine an offshore wind park, those hundreds of poles. The good thing is there is no fishery in that area. So now big companies like Ørsted have started to grow algae farms in that areas. So all of a sudden you create a new ecosystem, you create a second cash flow because you can use algae in cosmetics and anything. And at the third part, it is very, very positive for the nature of this field. Same thing with the big offshore wind park in front of the Netherlands. There is a mussels farm. So new innovative ideas, not only in the startup field or in the growing field, but in the big players field, in the big energy farms. There's a huge plant of agrovoltaic plants. Imagine photovoltaic areas, normally on land. They're this high and there's some grass below. And agrivoltaic is, the whole voltaic is up here. It's like at 2 meters, and they are now starting to grow fruits underneath. So that's super smart. So these kind of innovations are new, but they are scalable. And in combination with all the innovation that is going on, this will drive, especially in data, especially in AI, and especially in using technologies like drones, like measurement, like cameras, new intelligent cameras. It is possible to really scale up this renaturation.
So to your point about data and AI, I mean, this year the theme of the World Economic Forum is collaboration for the intelligent age. 2 years ago, it was all about hydrogen. Now it's all about AI. Could you dive a little bit more into how you're using AI and data to make better investment decisions, or to guide or to measure better the impacts of the investment on nature?
Well, it's really touching upon what I said earlier, but I think that while nature is providing us with trillions and trillions of dollars annually of ecosystemic services, and until today it was absolutely not valued in any investment decisions. And in my opinion, data and AI will change that. We had the big problem of data scarcity. Well, now with regulation and with innovation, you have the data, you have the tools. And I think that if we embrace them, we can really build a future where we can value impact when we make investment decisions. And it's just the beginning. It's a very long journey. But if we build on these advances, we can certainly make investors and businesses align profit and planetary health.
First of all, I think it should be AI for a degenerative world. Because we need to regenerate, and we have been degenerating for a while now. But AI is incredible, and I mean, I'm just summarizing the last couple of days of talks and inputs, and the fact that we can now scan the surface of the world, we can process and clarify the interconnectedness that wasn't clear before. We can do a lot of things, and there's nowhere to hide, right? There's nowhere to hide the fact that everything is interconnected, and we have to account for that. And if we have a financial system that underpins our civilization, we need to actually do those interconnectedness, and we have to change things drastically and rapidly. But there's one thing that a wise woman called Sylvia Earle, who is like an icon, like Jane Goodall or David Attenborough.
She's here.
She's here, and she finished the dinner last night by saying we can scan the surface of the world, but we can only scan about 4 meters below the surface of the ocean from up there. And the average depth of the ocean is 4,000 meters. So while somebody looks up and wants to explore Mars, we have a lot to explore on Earth, and we have a lot to map out. I'm excited about all of this, but it also means chaos, reconfiguration, breakdown, death, renewal, a lot of things. And I think doing our bit with the knowledge we have to nudge the system in a place where it doesn't lead to suffering and collapse is our living duty, which is why we're showing up on this panel. It's why we're doing the meeting in Frankfurt. It's why all of you guys in the room, and I hope that we'll all begin to think deeper about how we can show up and all like create this together rather than in separate proprietary cells.
Creating this together. So how do we collaborate? Do you have any examples of great collaborations that have been fruitful and that have created some impact?
Well, that was a good question. No, actually, I've been. I can elaborate on something that we have organized last year in June, and the idea was to put together and bring together asset owners. You would say, oh well, but this is also something like that. It's not. So here you have asset managers, you have banks, you have entrepreneurs, but you will not find any employee of a pension fund here. No way. Why? Because they're simply not allowed to come here because of compliance rules. They cannot be invaded. So the good thing is, if you want to talk to the people who have the fiduciary duty, who are responsible for these huge amounts of money, you have to invite them in a smaller forum. And we did that, and we had 90 asset owners coming to Frankfurt in a very modest, little environment, and it was not a conference, it was a working meeting. So they had to do some homework. I sent out homework to them 4 weeks before that, so do the homework. And they really appreciate that, because you had to do the homework. And then we came together 2.5 days in Frankfurt, and we worked in little groups of 10, 15 people. And what did we work on? And how to find solutions, and not only how to find the challenges and problems, but really how to find the solutions in order to be able to invest in nature and biodiversity. And the outcome was also one very big objective: to have an outcome, to have a result, was an action plan. And now we have a document saying, so what is the status quo of local, global asset owners? And we had pension funds from all over the world. We had the US Teachers Pension Fund. By the way, my favorite quote of them was when they were asked, so what is happening, because it was last June, what is happening is if this one person comes back to the White House and the guy who manages as part of a management of 1.4 trillion US dollars, so that's the US Teachers Pension Fund, he just said, I couldn't care less. And that was very hopeful, because in their side, investments are not political. So they have a pathway, they have a fiduciary duty. At the end of the day, we have this action plan, we're working on it. We're gonna do the same thing this year in September. And it's very, very fruitful, because it's a very small group of people who really want to work together. And I think this kind of exchange in a secured environment, not big conferences. A conference with 5,000 people is important and very inspirational, but does it really move anything? I think we are moving things. There is a lot of ongoing results to this, and I think that's necessary. Find your peers, talk to them, really start activities. And we need to go beyond just talking.
Well, at the Foundation, we're a very collaborative organization, so I cannot agree more with what you just said. I just want to say as well that we've been trying to break the silos between scientists, between entrepreneurs, investors, artists for so many years. We've organized several editions of an event called the Monaco Ocean Week, and I think this is a great enabler to connect people and have an impact. And then a big event that we have on our agenda this year will be the Blue Economy and Finance Forum. Antje, you said it, asset owners hold the keys to make real change on the long term. Today there is a lack of awareness on opportunities related to the blue economy. The Blue Economy and Finance Forum will have the objective to change that, to impulse a movement, to channel capital in what we believe is this right direction, and of course, collaboration is at the center of this effort.
And I mean, you represent a movement called ChangeNOW. There are lots of beautiful movements around the world, and I think now the time is ripe to begin to connect some of these dots and connect some of these streams, maybe in a fluid way. But Andrew Hoffman, who some of you might know, is a huge sort of champion, and the Hoffman family for generations have been fighting for nature. But he said, very poignantly, it's not how you spend your money, it's how you make it. So if we begin to put that into the equation, I think things will begin to move.
Thanks for that note, Erik. And it's true that, I mean, those major events, they do bring a lot of people, though, that can actually host some smaller gatherings where you can actually, move the needle and work in smaller groups. So, and they do have, that's what we're trying to do with ChangeNOW, is that the reason why we've gone to that scale is because we were able to attract so many people that didn't know about those topics or felt that those topics were not for them. And it's the movement overall that creates the attraction, and then within the attraction, then you're able to create programs for everyone and find so that everybody finds the content catered to his or her needs. I'll finish maybe with questions from the audience. Are there any questions for our panelists? Please.
Lena Gerdes from the SDG Impact Finance Initiative. So you've mentioned as well that there are way too few funds focusing not just on oceans, but nature-based solutions overall. What do you think that philanthropies and also governments can do to support not just existing funds, but also get more funds on the market and really mobilize private capital towards those solutions?
First of all, I would love that the playing field got evened out. I mean, while we're trying to save nature through institutional investment, there's actually, what I said, $7 trillion US dollars going to destroying nature through taxpayer subsidies. I mean, that's insane. It's like perverse. So that's one. Just do that, and the flow of money will begin to change. I think we can, de-risking models are everywhere, so I think de-risking models is what we need, and we need philanthropic money for that. We need public-private partnership, first loss capital, all the blended finance, all of these different mechanisms will all help build the volume. What's really going to unlock a lot of these nature solutions, it stops supporting nature destruction on an institutional scale. That will change everything overnight.
I think there's a big challenge with impact funds. Many of them are first vintages. And when you look at institutional investors, many of them don't want to invest in first vintages because they want to see a track record. So as a philanthropy, we understood this and we tried to support first vintages fund by investing in GPs that we support. Unatera is here, and this is part of the ones that we've been supporting. But now we have this experience with the Reocean Fund, and what we realize as a first vintage fund is that philanthropies are key in the process because they can take the risk. Family offices as well, they can take the risk.
And longer term as well.
In the longer term as well. So I think that philanthropic money and family office money can impulse a movement, and then once this movement starts, you have big money from institutional investors that starts to flow in.
Please.
Hi, Garrett Zinnerman from Green Digital Finance Alliance. Antje especially, I mean, I would be curious, for example, when you described also how pension funds in the long run, they're incentivized to invest sustainably, but in the short term, of course, I mean, they also need to have their payouts, and so therefore, how would you see, or what would be measures for them to also influence more the brown assets? And I was wondering, for example, about litigation funds as an asset class, which is high performing. And is that something that is something actively looked at, also to create basically the situation that they anyway are hoping to create in the future?
Well, what is special about institutional investors, as I said, they are highly regulated. Therefore, they have a very strict framework of asset and asset classes they are allowed to invest in. So anything that appears to be a little too exotic, like venture funds, or things that are more on the risky side, or even innovative things like tokenization and whatever, is very difficult for them to start with. But I believe in the term of the development of the market, you have, as I said, the value chain, and on the starting of the value chain, there is the philanthropic investors and the families. And what we see right now, because we also work for more than 300 families in Germany, the movement of the transformation of family ideas and investing is starting to change. So it's, even though we already have some families who are active in impact, but we see quite a lot of movement because of the generational change. And the new generation is already sitting at the table, and they might, they want to talk about sustainability in nature and blah, blah, blah. But the problem is the new generation doesn't take the decision yet. So, but they're there, and they, change the tone a little bit. But once the new generation takes over, we see from almost all of the families that we're working on, they shift. They shift to much more responsible investing. They are much more open to sustainability, to impact investing, to new ideas, to really fostering innovation. So there's a lot of hope in this generational change. And also in the institutional side, what can we do? One thing is always risk. And if long-term risks, which are absolutely connected to nature and climate change, are starting to become part of their long-term asset allocation. And there again, here we have the circle to data. Now we have the data, now we have the ability to actually calculate, put numbers on those risks. And once we have the numbers, we can include them in the long-term risk assessment. And that will change, also drive things.
One trend that we've noticed is also the creation of sector-based impact funds that are actually pooling resources from various family offices within the same sector. So we've seen that in the hospitality sector, in the construction sector, in the cosmetic sector as well, where the big families decide to actually pool the money from their own funds and create an impact fund for the sector, rather than doing their own corporate impact funds. And that's a new trend that we're seeing, and that I find very inspiring, because it shows that no single company is going to solve the problems, but collectively they can. You had a question?
It's Michelle from Clever Carbon. I'm curious if you think things like nature credits, biodiversity credits, is it net good?
Big debate.
One of my initiatives, the Grassland Initiative, completely depends on raising finance through the carbon credit markets. One thing has occurred to me over the last couple of months is that when you're talking about nature-based credit and holistic carbon, which I call it, like holistic carbon meaning nature-based carbon, soil organic carbon, then we need to have a new definition of it. It's not just carbon. It's nature, it's biodiversity, it's everything that underpins the generation of that carbon. By the way, carbon is the building block of life, if anybody have forgotten that. So the more life you build, essentially, the more carbon you sequester. But it's very complicated mechanism, it's biology. It's breathing out. So how do you actually account for that? So I think it has to have a wider, but yes, carbon markets, or call it what you will, biodiversity carbon markets, need to work in the favor. It's a transition mechanism, as far as I see it, until we can fully account for nature and put nature on the balance sheet. And the minute we have nature on the balance sheet, we actually don't need it anymore. We've got it all accounted for, but that's
Sounds so nice. I would like to add, because we have seen a strong decline in the voluntary carbon market. I think that was good. I think that was healthy, because it cleans up the industry. There was a lot of fraud and there was a lot of greenwashing in it. And due to that, there was like a shockwave through that market. And now we see a good development of carbon credits going more towards carbon capture. And carbon capture on a natural basis is the place to be. I've written a big study on biodiversity and also looked at biodiversity credits. There I'm not so sure about, because credits are always a tool to compensate. Yeah. You know, if a company destroys nature and buys a compensation tool to compensate, that doesn't make sense. They should just stop destroying nature. However, I believe that carbon markets will evolve into some more nature-based and carbon capture markets. And one thing that I'm personally working on right now is the plastic credit market. Because I'm in the board of the European Energy Exchange, and I think that's a great idea, because plastic you can count, and once you have a credit market, you have the ability to finance, you know, recycling and all the picking. So there is a finance instrument evolving. We need a market, we need an exchange, and that's something that we're working on.
We'll take one last question. Okay, 2 questions, but quickly. Yeah. You.
Mine is a direct follow-up to this. Okay.
Yeah.
Great. Hello, everyone. My name's Francisco.
Wait, he was first.
No, wasn't I? I don't know.
Yeah.
Hi, my name is Tim. I'm a partner in a German investment firm. Direct follow-up on this. So we've been working a lot with carbon alternative to organization of sustainability effects, like water, any type of that. Could you expand on that topic? Because I think in light of CSRD, this is going to be the topic.
I believe fully in tokenization, because the blockchain technology is the key source of reliable data. Because I need so many different sources to actually capture all the information I need for oceans, for forests, for nature. I just have to have all these different sources, and tokenization and, you know, making this whole massive amount of data available, but then also financeable. I just need tokens. I fully believe in that.
Yes, I don't want to take a lot of time to answer this, but I'm trying to make it super short. But again, it goes back to that very first comment about valuations and evaluations of companies. If you just take water risk to Nestle or Unilever, 2 examples that I dug into before this panel. Water risk alone, if you take the IPCC and you layer it on the supply shed, et cetera, means that those valuation will be driven down by, just by water, including water risk, 40%. 40% of the value of these giant companies will be stripped off the balance sheet. It's unbelievable. So, and that needs to be declared. So we'll see some big shifts coming up now with these 2 new regulations. I look forward to seeing the outcomes of it.
Yeah.
Last question here.
All right. Hello, everyone. My name's Francisco. I guess actually it's my turn now. So I just want to ask, you shared something about renewable energy, and that's like a source that companies really see lucrative. Why is it renewable energy they see really lucrative? Based on what I'm learning here, things like nature or bringing that in may not be as lucrative. Like, why is that? Is it just with the data that's out there specifically?
Can you elaborate on what is the question?
Yeah, you said how renewable energy is something very lucrative,
Yeah.
and when we're talking about bringing in investors. So why is it specifically renewable energy but not some of the other areas, like such as, yeah.
First of all, well, it's simply the size. If you're a pension fund and you manage 60 billion, you cannot put money in a project that needs 5 million. You just have to deploy billions. I have clients who the minimum amount of one investment is 100 million. So that's no way of, you know, starting companies or startups can manage that money. So they need to deploy huge amounts of money. And if you build a renewable energy plant, which is a proven technology, it's a clear, structural, regulated way of generating returns and cash flows, you can calculate it is the most attractive asset class, because you have cash flows that can be planned and calculated for the next 30 years because of the energy that is produced. And it's proven technology, and it's just huge. And you can easily deploy 500 billion there. So that's the difference. It's just the scale.
And it's something we know. It's building infrastructure, and it's being de-risked because the market's there already.
Yeah.
So it's just changing one from the other. So it's a very simplistic, linear, investable
It's just the size.
category.
No, thank you.
Thank you. Thank you, the three of you, for this morning. And we're gonna stay around. There will be a break, so if you want to connect with them, with us, we're here. Thank you very much again.
Thank you.